Hello everyone, this is Jake. Thank you for joining me on this video. In this video, I'm going to talk about my top dividend paying stocks and ETFs. I have 38 stocks and ETFs in my portfolio. So I will go over the top 5 stocks and ETFs that generate most of the dividend income in my portfolio. I'll go over these one by one and I'll give you my recommendation on them, whether they are currently a buy, hold or a sell. Also, I'll give my latest portfolio update. So before we dive deep into dividends and ETFs and like, let me just refresh your memory on yield on cost. Yield on cost, or YOC, is a measure of dividend yield calculated by dividing a stock's current dividend by the price initially paid for that stock. I'll give an example. Let's say in 2020 I bought a stock for $100 and its yield is 5%. That means I get $5 in dividends. Let's say 5 years from now the company is still giving $5, but the value of stock decreased from $100 to $50. So in 2025, if you're looking in Seeking Alpha or Yahoo Finance, you'll see that that particular stock's yield is 10%, right? Because the stock is worth 50, it gives $5 out, so you get 10% yield. But now think in terms of someone who got into the stock in 2020, right? They started with the yield of 5%, so that's good. They're still getting that 5% yield 5 years later, but the value of the equity went from $100 to $50. So even though from that person's point of view, or in this case my point of view, it's a horrible investment, right? Because I lost half my equity. And in most of the cases it's a little more severe, because if the value of stocks go down, the dividend payout also goes down. So in this example I said that the company consistently paid $5 for the whole 5 years. Most of the time what happens is when the value of stock goes down, this $5 dividend becomes a $4, $3, right? So keep this concept in mind. So with that, let's get started. So my fifth largest dividend paying holding is Global X Super Dividend REIT ETF, or in short SRET. So SRET invests in 30 of the highest dividend yielding REITs globally. Sounds like a good REIT ETF for global exposure, right? So that's what I thought when I initially invested in SRET. Digging in a bit further, I found that more than 80% of the fund is exposed to United States market, and the other 10% is invested in Canada. So technically this fund has almost 90% North American exposure. Also behind the scenes, this is in fact a mortgage REIT. So mortgage REITs tend to do really bad during the times of low mortgage rates, as it is now. So if the mortgage rates ever go up, this will be a good investment. So let's look at some facts and figures. The fee or the expense ratio is 0.59%, so pretty expensive. Current dividend yield is 7.33%, and the 5-year returns is a horrendous minus 27%. So that is a significant erosion in equity value. And the 5-year yield on cost is 5.02. Remember the yield on cost that we discussed before? The current dividend yield is 7.33, and the 5-year yield on cost is 5.02. So what does that mean? Someone who invested 5 years earlier is doing pretty bad, because the value of the stock has gone down. So a rule of thumb, so if you see yield on 5-year yield on cost lower than the current dividend yield, don't touch that stock or ETF. It's a pretty bad investment. So when I initially invested in this, I did not know this, but I don't want to sell it now. So this ETF actually is still 50% down from its Feb 2020 high. I own 179 shares of SRET at an average cost of $9.51. I'm at a net capital loss of 4.84% on this position. Even though the position size as a percentage of my portfolio is relatively small at $1,623, this ETF has an outsized impact on my portfolio in terms of dividends and yields me $123 annually. And that's simply because it has a higher yield, that's all. So what is my recommendation? I would not personally add more SRET into my portfolio other than through dividend reinvestments. Even though in the long term I think this is a good investment, no one knows how long that long term is going to be, right? The mortgage rates has to increase at some point of time. At that time, this is going to be a good investment. So until then, SRET is a hold from me. So on to my next holding. So my fourth largest dividend paying holding is VNQI, or Vanguard Global X US Real Estate ETF. VNQI is a Vanguard ETF, and the fund invests in public equity market globally, excluding US region. VNQI is a good way to diversify your real estate portfolio internationally. So let's look at this ETF's 5-year performance, 6.82%. So from a growth perspective, nothing much to look at. Now let's look at the 5-year YOC, 6.98%. So that is steady. So good. And the expense ratio for VNQI is a low 0.12%. Very nice. I own 47 shares of VNQI at an average cost of $48.31, and I'm at a net capital gain of 11.87% on this position. Again, the position size as a percentage of my portfolio is relatively small at $2,539.88, but it yields me $171.63 annually. So would I recommend VNQI? Definitely. This is a buy for me. The relatively high dividend without capital erosion is a good way to build long-term wealth. On to the next one. My third largest dividend paying holding is Disney. Disney has a yield of 0.57%. Due to COVID situation, to preserve cash, Disney has paused paying dividends. However, post-corona, Disney business is going to remain solid. They're also a strong player in video streaming service with Disney Plus. I own 102 shares of Disney at an average price of $113.63. I have a positive return of 35.65% on Disney. I also have made money in the way of option premium, and Disney nets me $180.09 in dividends annually. So at the current price of nearly $154, Disney is a bit overvalued, but if the stock retraces to 140, Disney is definitely a buy. And if your investment horizon is like really long term, even at the current price of 154, Disney is definitely a buy. My second largest dividend paying holding is VYMI, or Vanguard International High Dividend Yield ETF. This fund invests in growth and value stocks of companies across diversified market capitalization. It invests in dividend paying stocks of companies. This ETF has a yield of 3.18%. The 5-year return is 14.10%, not too bad. By the way, this ETF is relatively new, so yield on cost, 5-year yield on cost is not available, but the 4-year yield on cost is 3.37%. So it's definitely higher than the current yield of 3.18, so good. So VYMI is a solid dividend ETF with a steady yield and only has an expense ratio of 0.27%. Personally, I own 93 shares of VYMI at an average cost of $57.82, with gains of 5.08% on this position. VYMI nets me $181.08 annually in dividends. So for folks who need to diversify their portfolio, and this is definitely a buy even at the current price. Finally, my largest dividend paying holding. Can you guess what this one is? This is my biggest holding with a dividend yield of 1.04%. By now you might have guessed it, Microsoft. 5-year return on Microsoft is 296.52%. Crazy high. The yield on cost, 5-year yield on cost is 4.12%. Another crazy high value. Remember, the current yield is only 1.04%. So someone who invested 5 years before, for them the personal yield, their yield is going to be 4.12%. So nice number. I own 130 shares of Microsoft at an average cost of $166.96. My gains on Microsoft is 28.17%, so that's the capital gains. Microsoft pays me $292.49 annually. Also, I've made money from this position by selling options. Microsoft is definitely, in the last 5-6 years, has been a wealth builder with a solid business model, enterprise computing, Office 365 subscription business, the cloud business via Azure. Microsoft will remain a dominant player in years to come. So though the stock is quite overvalued now, it is a strong buy, especially for people with a long investment horizon. That is my 5 top holdings. So now let's look at my portfolio performance. This is Robinhood craziness. I did not have a gain of 17k last day or 21% gain. That's some error, I don't know. So let's start with the weekly gain. I have 1.91% gain for the past week, or $1,800. For the month it's 10.94% gain, or $9,700. 3 months it's 18.09%, or $15,000. For the past year, my gain is 45.86%, or $31,000. And overall, since the beginning of time, 56.18% gain, or 35k. So I'm pretty close to hitting my target or first milestone of 100k. If the market doesn't crash in December, I certainly hope not. So by the time I make next video, I really wish it hits the milestone. That'll be great. So that's all I have for today, folks. Hope you all are staying safe. Until we meet again, ciao.